Hi, Peter Rose, Longwood Currency Trading. I've got my coffee. Can you see my coffee? Yep. Great. You always have to have a sip of coffee first before you get going on anything. Today's video. I always start out, today's video. The topic I'd like to discuss tonight is how chess opening theory can be applied to Forex trade entry analysis. It's kind of brought to my attention. I mean, I've played a lot of chess. My dad taught me how to play chess when I was 7, and I just played a lot of chess. And when I graduated from college and moved out here to New England, there was a several-year period of time there where I was playing chess 4 or 5 hours a day, going through opening theory, and I was even going down to the Boston Chess Club. I'd play down there a few times, although I got my ass so severely beat and humiliated that I went twice. And I remember the situation. The guy said, "Hey, you want to play some speed chess?" Yeah, okay, I'll go. And he just went bum, 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 and I was done in like 10 moves. I can't think that fast. I wasn't that good. I was a strong beginner player, strong intermediate player. I knew, maybe 5 opening patterns on white and on black. But I appreciated the theory of it. I appreciated the strategic nature of the game. I loved the game. And I just wasn't motivated to play at a competitive level, like in a team thing or real competitions. I had friends that we'd get together and all we'd do is drink beer or wine and play chess, and that was great fun. But I hadn't really thought about chess in relationship to how it may be applicable to the Forex market until just the other night we started watching the Netflix series, The Queen's Gambit. This is November of 2020, and that just came out. And so my wife and I started watching that. And I was commenting to her during the movie about how almost possessed I was. I mean, I can understand that possession to a pursuit of fantasy land, I guess you would call it. And I remember my dad teaching me the Sicilian defense. I remember my dad starting me out with the Roy Lopez opening and branching out from that. Ruben Fine's ideas behind the chess openings. It's just a really marvelous game. And if you're a currency trader and you don't know how to play chess, I'd strongly suggest that you learn how to do that to a high degree of skill, because it will teach you strategic thinking. It will teach you to think to the end game, which is what I'm going to be talking about here today. So chess is really good for that. I haven't played chess since probably the early 70s. It's such a, you sit down with somebody and you play for an hour and a half and there's no distraction, and it's, at some point it is not socially interacting, and it's not good for you. In any event, I switched to backgammon, and I play about 3,000 games of backgammon a year, or I have for 2,000 anyway, and I have for about the last 10 years anyway. And before that, played fairly actively. And I think backgammon, if you don't know that, that's another game, because it teaches you to make decisions and live and die by them, and then as the dice change, you have to change your mind all the time. It's constant. You don't even call it analysis. You're really moving the backgammon checkers on instinct and experience, which is very, very similar to how we have to deal with the Forex market, particularly if you're a short-term trader. In the longer-term analysis, you still have to learn how to take a bad decision and to turn it around. In chess, the whole idea is you don't make a bad decision. You take 5 minutes to decide what you're going to do, and it's the best you can do because you've gone over all the permutations. That's not a possibility in backgammon because there are an inordinate number, probably an order of magnitude, more numbers of possible decisions that can't be tossed out in backgammon than there are in chess. In chess, you may have 640 or something responses to a particular move, but 638 of them don't make any sense. So, from that standpoint, it becomes easier. On another standpoint, in chess, it becomes more difficult because you have people with these photographic memories that can memorize 12 moves down in 12 different opening systems, and you just can't beat somebody like that because the thing has been played. Those 12 moves have been played for 200 years, and if you don't follow along, you'll lose far more sooner than the 12 moves. I learned that at the Boston Chess Club. So how does all this relate to FOREX opening, FOREX entry analysis? And it's an interesting correlation, and probably only one that I could make because of all the crazy things that I've done in my life. And I've always felt that when you learn something, it'll come back again in another form. And the more that you learn, the more those things come back to you, and they form relationships to other things that you do that bring clarity to life around you. And so in watching the Queen's Gambit, I realized that I've been applying chess opening theory, and I have long, and students that I work with, I long relate the FOREX trading to backgammon, but I've never really related it in a teaching sense to a student, because most people don't play chess, or if they do, all they do is move the pieces, and so they wouldn't really get the analogies and things that chess can offer. And I think therein lies one of the biggest analogies between chess and FOREX, is that in FOREX there's this tremendous not desire, but thinking that the correct way to learn to trade FOREX is by reading all these books and watching crazy videos like this one, and all you're really doing is gaining information. You have information. Well, certainly information is important, but as I've said many times, if I want to drive a car down to the grocery store, I don't need to understand engine combustion theory, right? I just need to know where to put the gas in, make sure there's enough gas, and where to turn the car on, and some rules of the road. Boom, and I'm at the grocery store. Because the goal isn't driving the car, the goal is getting to the grocery store. The car is a tool. The goal in FOREX trading is to make money. The trading platform and the entry analysis and exit theory that you do, those are all tools in order to achieve that goal. And so I think that's missed in all of the education that's going on out there, because most of the people that are teaching trading are only traders. They don't have multidiscipline life experience, so they can relate to you. Maybe you don't have any chess experience, you're not going to be interested in this video. Maybe you don't have any backgammon experience, so you're not going to be a real good student of mine. Maybe you're a baseball fanatic and you watched Moneyball, and you know that the statistical analysis of doing statistical analysis on different aspects of a player's background may bring out strengths that are being undervalued in the marketplace. And we do the same thing in FOREX. We do that type of probability analysis on our entry theories. We do it on how far the trade will get in a productive trade. We do it on exit analysis. We do it from a fundamental standpoint, certainly looking at the economic impacts that an NFP, for example, will have at this particular time in conjunction with a pandemic and U.S. elections that we just had. If you happen to be U.S. citizens, or you're trading the dollar cross pairs, so we do that sort of analysis. But if you're just doing that based on the information, then you're kind of missing out on the success that you should be having, because I mean, again, it's like trying to get to the grocery store in your car and you're worried about whether the pistons are hitting at the right frequency or not, and it has nothing to do with that. It has to do with not getting hit by another car, you know? If you don't understand chess, then you're not going to get this video. And it doesn't need to go on for 20 minutes like most of mine do. I could just make a statement. But if all I want to do is make a statement, I'd write my congressman, and that would be it. This is an experiential YouTube channel where I'm trying to teach principles, and I'm trying to show, based on my multidisciplined experience, how I bring that to bear in the Forex market. And I think chess, if you understand anything about chess, or you do any reading about the principles or the theory of it, that you understand that the opening theory of chess is all based on where you want to get to. Well, the whole chess game is you want to checkmate the king. There's two major end goals or end positions that you're going to end up with. You're going to end up with your opponent castling either to the left side or to the right side, the king side or the queen side. And then you've got to go down and you've got to attack the castle and break in. Sure, many times the opponent won't castle because of conditions that you put on him, or because he has such an overwhelming advantage. To take one move to castle when it's not necessary could cost you what's called a tempi, a time element, where the other guy could take over the momentum of the game. But for all practical purposes, I don't know what the percentage is, but you'll find that castling is a critical part of securing your king so that you can go and bust the other guy. So you're either going to castle to the king side or the queen side. Your opponent is. So how you open the game could either determine which side that guy castles to, or it could determine which side you're going to castle to. So you're constantly in, again, if you're a chess player, if you've read Jose Capablanca's book, Last Lectures. Capablanca was a world champion, and he wrote this marvelous, marvelous book called Last Lectures. And his principle was, when he's teaching chess, he starts at the end. He takes all the pieces off the board, and he just has the two kings, and you move the two kings around. Then he'll throw a pawn on there, or throw a bishop on there, and you move it around. You try to checkmate the other piece, because that's the whole point of the game, is checkmate the king. And so you don't start off with all your pawns lined up and the guys behind it and go pawn to king 4, and then black responds pawn to king 3, and you respond, bishop to whatever. That isn't how you learn how to play chess. What's the point of the game? It's to capture the king, to checkmate the king. And so how do you do that? Well, this is how a bishop would do it, this is how the knight would do it, this is how the rook would do it. What happens if the pawn gets to the last row? You make it a queen. And so you learn not only the rules of piece movement, but you also learn the hierarchical value that each piece has. A pawn doesn't have as much value as a rook, obviously. And how do you connect the activities of a knight and a bishop in order to corner the king? So that's what you learn. That's what you're striving for in your chess game. So all of your opening theory encompasses the end game, because you're either trying to force the guy to castle to one side, or you're responding aggressively at the person because he did cancel to one side. So all of opening theory can be broken down into those two particular theoretical constructs. In trading, we're doing the same thing. We're saying, well, I want to make money, and here's a bunch of structure, past price action structure that's splattered on my chart. I've got some ATR knowledge. I've got some momentum knowledge from the size of the candles as a percentage of the current ATR. I've got directional bias if we're trending. or if we're chopped, then that's a whole other series of questions and things that you ask yourself. But really what you're doing is you're looking at the chart as a chessboard, and you're looking at that end game. How can I make money? In the end result, with all this shit that's up there, how do I make money? What steps do I take? Well, my opening theory is going to be, do I open here? Do I wait? Perhaps I'm acting as black, and really as a currency trader, comparing to chess, we're really black. We're not the dog in the thing. We're not a time element ahead by playing the white pieces. We're behind because we're responding to price action. We're not creating the price action. If we were a big institutional trader with a $3 billion order and we dumped it all in there, well, we'd be the dog in the thing, and so we could say that they're playing the white pieces. And in fact, that's the way that I look at it. I'm just playing the black pieces, so I'm playing defense. What's defense in currency trading? It's risk management. So the first thing you got to look at is you have to look at your reward. What's your reward? Based on the structure that the board, the Forex market itself, is displaying to you, is there the potential to make 5 pips, 25 pips, whatever it is. I'm a short-term trader, so I'm not under any delusion that I'm going to hit 50 pips today. I might hit 50 pips doing 20 trades, but I'm not going to do it as my opening move. I want to make sure that the price is running in my direction, that it has enough velocity and momentum in order to continue in the direction that's moving, so I can at least get 5 pips. And I've talked ad nauseum about the value of 5 pips. I've done videos on the value of 1 pip. But I want to be sure that if I step up to the board, I'm going to be able to grab that 5 pips, at least. So I need enough momentum for the thing to go beyond that 5 pip point, so that if price begins to stagger, I can go, I think it's run out of gas. It's going to turn around. Now, it could turn around 5 pips. It could turn around 10 pips. I don't know where it's going to turn around, but if I've got some profit on the table and it starts to turn around, then my evaluation of the momentum in the start of the entry was incorrect, and I better step off to the side and wait and see what happens. And so in Forex trading, we can get out of the game. In chess, you can't get out of the game. But because the end has come very, very soon. So if I see that price begin to stall, I'm going to get out. So maybe it's fallen back, and I only get 3 pips out of it. Well, that's okay, because the next time that price comes up, and everything changes after you get out. The whole price action structural view of that market has changed, right? And so you have to then take another evaluation of the market situation at that particular time. God, I talk so much. I'm gonna get some more coffee here. Isn't this a beautiful day? It rained really hard last night, and I hope you can see through the window glass. I'm here embracing this little sun that we have. I've taken a lot of shit from the last video I did, where I hung a fucking bath towel over a rod and over my window to keep the sun out. And what in the hell are you doing hanging a bath towel and taking a video and trading? You look like a complete fucking moron. I was just blocking out the sun. I didn't know it was going to show up in the video. And I didn't really care. So obviously, telephone call interruption. So the opening theory of chess, which points you at how you're going to win the game, is directly applicable to what we're trying to do in the currency market, and looking at the structures as we go into the situation. And as I was just talking about getting out of a trade that is, we thought it was going to go good for us, but it started to stagger a little bit. So why wait for it to go into negative territory? Take a few pips profit and sit on the sidelines and wait. And if price then begins to go back in the direction that you thought, you can reevaluate that structure, because just that little movement, just that change, a few bars or 10 bars or however long it takes for the price to turn around and go back up, that changes the entire environment of the board, of the market, the structure that you're seeing. The same way that chess would. Now the chessboard doesn't change from move to move anywhere near as dramatically as one throw of the dice in a backgammon game can go. One throw of the dice can change the whole friggin' thing. And so, you can do that 5 or 6 or 8 times in a row before there's any semblance, in backgammon, before there's any semblance to trying to get your forces and theory and probability analysis squared away. That's why backgammon is so fascinating. Also, you can sit there and drink wine and chit-chat with everybody around. My wife and I sit there for about an hour and a half every night. We have a glass of wine, we have some snacks, and we trash talk each other playing backgammon. It's a wonderful time. It's just a great thing where you couldn't do that over chess. And I certainly can't do it with her over currency trading, because she has absolutely no interest in currency trading. And would be bored to tears if I was trying to compare chess theory to currency and entry analysis. So the key to bringing chess opening theory into the currency entry analysis is to always keep your eye on the prize. What is it that you're trying to do? You're trying to make money. Now, if you're trying to make 50 pips, in my thinking, you're out of your freaking mind. You're going to have to be up on the daily chart. You're going to have to sit there with that position for 2 days or 3 days to make that 50 pips. Oh, you could make it in 15 minutes. I've seen the price go 300 pips in 20 seconds. All I'm saying is I'm pretty sure that I can get 5 pips. I'm pretty sure I can judge that. And because I have a high win-to-loss ratio of about 70% when I'm on my game, I can take those few losses because I know when to sit on my hands, when not to go. Because I'm looking at the end game. I'm not looking at, oh, price is here, I'm going to go in. I'm not going to go in. That's not how I would play chess. I'm making my moves based on how I perceive. I'm trying to force the other guy's king to move so I can trap him. And all I'm trying to do in applying that theory into the Forex market and into my trading is don't get focused on the trade entry. Why are you entering the trade? You have to keep that in mind. Why are you entering the trade? Because that's what you're supposed to do. You got to enter the fucking trade before you can manage it and then exit it? I don't think so. Maybe that's what you do, but that isn't what you think. You can't think that way. And look, I can say all the things that I do on these videos because I've got more diverse experience than 99% of the Forex educators that are out there. And I'm not slamming them. Some of them are really, really, really good. But you have to pick one that has multidiscipline experience, business experience, sports performance experience, games experience, life experience to bring to the trading. You can't just take some kid that stumbled off the bus, got lucky, made $60,000, and then doubled that, and he's a trading genius. You can't learn from somebody like that, I guess is what I'm saying. God love them that they can do it, but that doesn't necessarily mean that they could teach you. Find somebody that could teach you, And in my experience, when I've ever wanted to learn something, I've wanted to learn from an expert, but I didn't want to learn from an expert that was solely focused on that one thing. Because all things in nature, I've got 50 years in martial arts. Everything in nature is connected. From a martial artist speaks philosophically of the world, not just punching and kicking. Because we can punch somebody in the face means we have no fear. If you want to jump with me, that's fine. I'm going to punch you in your face. If I win, lose, draw, it doesn't make any difference. because I'm not interested in punching you in the face. I'm interested in bettering my life by not having fear of what you do or what you think of me. So if you think ill of me and you think I'm an asshole, that's fine. If you don't like my hair long, or you didn't like the towel in my window, I don't give a shit. If you want to come up and punch me in my face, go ahead. I'm not interested in doing that, but you'll catch it back. I'm not afraid of that. I'll deal with it. And so I'm not afraid of trading. I'm not afraid of loss. I embrace loss as part of the game. But not all people that I work with have that kind of experience, and so it's important for me, it's important for the educator to look at the student that they're trying to help and say, what experiences do you have that you can relate to this trading thing that you don't have any experience in? Because there are relationships that we can draw. You know, I've drawn relationships with I played classical guitar for a couple of years with a world-class teacher. I've played chess, I've sailed, I cook, and I've brought all of these things into the videos that I do as being part of the flow of the nature around me, of which I've taken on currency trading as another aspect of that life. Now that's why I'm a good teacher, because I don't teach what I know, I teach what the student needs to know. And there are other educators out there that do that. You know, Langer's The Scruffy Trader is a fine example. He didn't give a shit what you think about him, he's just trading. And he knows how to teach it because he's got life experience. And there are others, but I particularly like his style of trading, and I like his attitude, and I like his approach. And he doesn't have any fear of anything, because he lost everything in the world that he had, like I did, and worked his way back. And you can't beat that for somebody to help you out. Take the view, and again, I'm assuming if you're still watching this video that you do have some chess experience. Take your view, whatever ability level or experience level that you have in that, it's easy to see that you got to look at the end. You got to look at the end game of chess, because that's the only way you learn it. That's the thing that's in your head the whole time. Checkmate the other guy's king. Take that experience that you have and try to see how you can weave that experience into your Forex trading, because I think it'll pay you a lot of benefits. The only caveat that I put in every video that I do, in every blog post on my site, longwoodcurrencytrading.com, that I caution people with, is that the only thing we have control over is how much we lose, is our risk or our life expenses. We have no control over how much money we're going to make. We go to a job and they pay us, and then on Tuesday, I'm sorry, we got to let you go. Or you come in and you get a bad review, and I'm sorry, we're going to cut your pay. Or Bob's doing a better job than you are, so we're going to move you down into shipping instead of where you are running the marketing desk, or whatever it is, the stupid shit that goes on out there. You have no control over that. But you do have control over how much money you spend. Of course, you need to buy food. You need to pay your rent. You don't need to get a haircut. Look logically at things. People spend thousands of dollars a year on their wardrobe. This shirt I've got on, I've had this for 10 years, I think. It's a nice shirt, keeps me warm. Who am I going to impress? Be a millionaire? I'm going to impress somebody? Oh, fuck that. I didn't get to be a millionaire by impressing other people. I had to be a millionaire by investing my money wisely. And I'm happy to do the currency trading because it's a challenge. It's a game. So if you're going to do currency trading, don't do it to lose your money. Do it with the end game in sight, that you're there to win money. Now, let's figure out a way to have fun to do that. Make it a game. Chess is a good example of that. But you need to be able to manage your risk. And that's why I say, get a set pip amount, not a dollar amount of loss, a set pip amount. People will say, well, what does the set pip amount have to do with the structure? It has nothing to do with the structure. That's the point. You're not evaluating the structure for loss, you're evaluating the structure for gain. Yes, a certain percentage of the time it will go against you and it will hit that short pip stop. What difference does it make? Because the next time you trade, maybe you lose again. And the next time you trade, you'll make 3 times the 2 losses that you had. So you're ahead 1. And wasn't that the point of the first trade, is to get ahead 1? All right, so now you do that set again. That's a 1 in 4, a 33% win rate. And if you're winning 2 for every 1 that you lose, you'll make money or you won't go broke. And that's a crappy win-loss ratio. Believe me, 33% is really shitty. When you get good at this stuff, you'll be over 50% with a little bit higher amount that you win than what you lose. So you're in good shape. You just have to learn the rules of the game, just like you do in chess. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.